Which brings us to this morning's speaker. He is a chartered accountant, registered trust and estate practitioner, and tax specialist practicing in Calgary. His main areas of expertise is tax and estate planning for business owners and private corporations, for executives, for professional athletes, and for other high net worth individuals. Kim is a past chair and a past deputy chair of the board, past treasurer, as well as the past chair of the technical committee for the Society of Trust and Estate Practitioners in Canada, which is otherwise referred to as STEP. Kim is the founder of a tax specialist group, the Association of Tax Specialist Firms across Canada. Kim is the author of numerous articles and papers which have been published in many places across Canada, and he is a current tax instructor for the Certified Professional Accountants of Alberta Professional Development Program. The topic today is Canada due for a tax reform? Would you please welcome Kim Moody.
Just have to make sure this is on. So, is it working? Yeah. Awesome. Well, thanks very much for having me here. As I've told the committee, and by the way, what a great committee. Thanks for doing this. I really have enjoyed my time so far and experience. And I spoke at this school, I want to say about a dozen years ago, for a lot of years. And then all of a sudden I must have pissed somebody off. Because I didn't, and they brought in Jamie. And so, Jamie, I don't know why the hell you're in the front row today. But anyhow, so I'm real honored to be back, and I was given very strict instructions: no swearing, no politics, no short jokes, etc. So we'll see how well I do today. So today, I thought we would talk about, is Canada ready for comprehensive tax review and reform? And for a bunch of investment insurance advisors and professionals, this is something that certainly in the tax community, there's been a bunch of us that have been really keen on this topic for a while. And so I thought I'd share with you why, because I think it's a topic that's worthy of not just tax geeks like Jamie and myself, but for the broader community, including the average Canadian. And so this is the agenda that I'm going to talk about for the next couple hours. And so, oh, good, you're paying attention. I like it. So, I don't think I have 2 hours to talk about this. So, skill testing questions in the agenda. When was the income tax introduced into Canadian law? How many times in Canadian history has there been a comprehensive review of our country's overall tax system? When was the last time? What was the result? Has there been many or limited reviews of our income tax system since the last comprehensive review? And is Canada ready for a comprehensive review? So that's what I'm going to talk about today. But before we get going, how many of you recognize these classic album covers? Yeah? So we've got here, and I know the youngsters, and I see a few youngsters here, so I'm going to ignore you purposely. Because if you're anything like my kids, they have no idea. I mean, yes, how many of you have Sirius XM and listen to Channel 25, classic? Yeah, that's all I listen to, and a little bit of 80s. And just to digress for a second, my first career choice was to be a music teacher. I loved playing piano. I got up to pretty high level. And I studied music theory, got up to pretty high level. And I was going to take the world on in music. And if you know anything about music, it's a lot of math, right? How many musicians here? Yeah? A lot of math, right? A lot of beats and rhythm, and especially when you get into theory. And I was always pretty good with math. When I got into grade 12, I realized that, because I went to some competitions, I recognized that, geez, I'm good, but I'm not that good. And I'm going to go broke if I decide to be a music teacher. So I quickly switched into accounting or commerce in undergrad. And as I progressed throughout my career, I realized that I just can't listen. How many of you need music to listen to in the background when you're doing work? Yeah, a lot of you, right? You need a distraction. For me, I need a distraction. But I can't listen to some of the great classical music, which is my favorite music of all time. Love classical music. But I can't. When I'm trying to study or write a memo or do an email, I can't, because all I'm thinking about is the math in the background, right? And it really distracts me. And so I came into classic rock, because it's pretty simple stuff. Usually 3 chords. You don't have to be a genius musician to play classic rock, typically, although there are some. And the lyrics are what? Sex, drugs, and rock and roll, right? Not too deep, typically. And so Canada has had its fair share of non-deep thinkers. And, and here's a list of them. I mean, I love these, because in the background as I do work or sit in the car, I don't have to think too hard. I know I'm going to get some AC/DC with Sex, Drugs, and Rock and Roll, and I love it. Bryan Adams, Gowan, Honeymoon Suite. Oh, remember those guys? Kim Mitchell, Northern Pikes, Tom Cochrane, Streetheart, and then it goes on. I'll personally give a free copy of my book that I wrote 3 years ago. If anybody can tell me the bottom left corner. Oh, shit. Hey, what's he famous for? There you go. Okay, come send me a note, whoever said it first over here. Send me a note, and I'll get you a free copy. I think you're full of shit, Corey. So why am I telling you this? Well, I'm a pretty proud Canadian, and what's the commonality between these bands and comprehensive tax reform?
It's been a long time since they've been talking about it.
Close. They're all old, right? Just like Canadian comprehensive tax review and reform. But the band's music has aged nicely. How many of you still listen to these bands' music? Yeah, fair. Do your kids get bombarded with it? I hope. Yes. And as we'll talk about in a minute, the last report of the Royal Commission on Taxation has aged quite nicely. So the next time you think about comprehensive tax reform, or sorry, the next time you hear Summer of '69 by Bryan Adams, think about comprehensive tax reform or review. And then you'll be a real geek like Jamie and I. So, what's that?
Why are you running a good song?
Why am I rooting a good song? I think I'm making it better. And so before I move on to the meat of it, when I got asked to speak here, I went to my tailor and I said, I'm going to be speaking on this topic. You know I'm a proud Canadian. You know I like Canadian rock bands. So just get me a jacket that kind of reflects that. And so I'm wearing that jacket today. So I know there's some people in the audience that know what this pattern is. What is this pattern? Sorry? No, it's not plaid. It's the tartan. Which one? Close. It is Canada's tartan. It's the maple leaf tartan, which is an official symbol of Canada. And so this, if you don't know that, which I had no idea until my tailor showed up a couple weeks ago with this, and it's the official tartan of Canada. And he blazoned it with these rock bands. Right? And what does it say here, Corey? Since you're a bit of a smart ass. What does that say?
Size 24. It says Kim Can Rock.
Can, of course, is a play on Canada. So I am a very, very proud Canadian. I'm a little concerned about where we're at with tax. And so let's get back to our regularly scheduled programming. So, when was the income tax introduced into law? I already gave it away. Sorry?
1917.
Yes. Yes, the First World War, because we had a problem with funding it. Back then, Canada, over 100 years ago, its sole source of, not sole, but over 90% of its revenues from taxation was with customs duties, customs and excise duties. And so, but that was really not enough to fund the war measure, or sorry, the war efforts. And so Finance Minister Thomas White really struggled. If you go to the Wikipedia page, where some of this is replicated right from the Wikipedia page on Thomas White, he really struggled with the introduction of a tax. He didn't want to do it. But he did introduce, and I was talking to Jamie about this on Monday, he introduced a windfall tax on grocers prior to the introduction of the income tax. And so this whole concept of a windfall tax is not a new idea. It's been around forever. And so, so in any event, finally in September of 1917, they introduced the income tax. And so, yeah, that's about it. So this is the screaming headlines in the Globe and Mail. Income tax is introduced by Sir Thomas White. And there's a copy of the front cover. How many pages, Jamie, was this Income Tax War Act?
It was small, like 10 or something.
I think it was 11 pages, if I recall. Very, very small. And what it did, it introduced a tax of 4% on all income of single men over 2,000. I find that kind of comical in today's standards. Just men. I find that discriminatory. For Canadians with annual incomes of more than $6,000, and the tax rate ranged from 2 to 25%. It was pretty simple. And if you actually get a copy of the act, it's floating around the internet, it's actually somewhat simple to understand and apply. Today, the Income Tax Act is roughly about this thick, and it's incomprehensible, unless you're Jamie. Would you agree, though? Yeah, it's pretty incomprehensible. And frankly, for people like Jamie and I, who spend every day plowing through the Income Tax Act, it's exhausting. And to suggest that we have all the answers, we don't. And so and I'll talk more about that in a second here. So given such a complex system, how many times in the last 106 years do you think that we've had an overall review of our tax system? Any guesses? 1, 2, 3. How about 10? No? Yeah, I've heard the answer many times here. It's 1. And when you think about that, you know, the average human being lives roughly 80-some years. Let's just be aggressive and say 85. You would think that during a lifetime it would be more than just once that we've had a comprehensive review of something that's so important to Canadians' livelihoods and to our economic system and our standard of living. Taxation is extremely important. And so with one overall comprehensive review, that's just one reason why I think it's time, and I think there's a lot of people that agree with me, that it's overdue for review. When was the last time? What dates? Any guesses, historians?
67 to 69.
67 is close. No.
62 to 64.
No, close.
62 to 69.
No, close. 62 to 66. Who was the prime minister that appointed?
Carter.
Trudeau. Give me a break. I was told not to comment on politics, and I won't. Okay. Diefenbaker, one of my favorite prime ministers of all time. Why? He's a Saskatchewan boy. He was born. His hometown was where I was born, Prince Albert, Saskatchewan.
He gave away the Avro Arrow.
He gave away the Avro Arrow. Yeah, that's debatable.
And built the
So,
bunkers.
what's that?
And built the Diefen bunkers.
He built the Diefen bunkers. Yeah, he's famous for a lot of things, but in my world, he's famous for having the courage to actually appoint a Royal Commission on Taxation, because that is, as much as politics, and I promise I'm not going to comment too much on politics, but when you talk tax, it's inevitable, especially tax policy. It's very, very political. And that was a very risky move on his part to appoint, in the middle of his tenure, a Royal Commission on Taxation, which lasted beyond his term, because he got turfed out of office and replaced by who? Pearson. We do have some historians here, which is great. Love that. In my undergrad, I minored in Canadian post-Confederation history and political science. So I love that whole era of post-Confederation to present. But it's 61 years ago that the commission was appointed by a chartered accountant, Kenneth Carter, and he led the commission for 4 years and issued a landmark series of reports and ultimately This is what it looks like. This is a copy of the first volume in 1966. And that report was famous for a bunch of things, but in certainly Jamie's world and my world, this line here, a buck is a buck is a buck. I mean, I've searched the reports. I can't find that exact saying, but he's famous for reputedly saying that. Because the point being is that if you're economically enriched by a dollar, it shouldn't matter what the source of that is, whether it's a capital gain, whether it's dividend income, whether it's salary income. A buck is a buck is a buck. And if a buck is a buck is a buck, then you should be taxed on that buck. And so his proposition, or the committee's proposition at the time, was full taxation of capital gains. Because back then, were capital gains taxable? No, they were not. So do you think there was a lot of games played to treat certain economic enrichments as capital gains?
Yes.
Oh, of course. Of course. There was tons of games played back then. Do you think there's still games played today?
Yes.
Why? Why is there lots of games played? Because capital gains are only half taxable, right? And in some cases, capital gains are not taxable. Give me 2 examples of where they're not taxable. Principal residence exemption. I wrote about that today, by the way, in my newsletter, which I released. I publish a weekly newsletter. And what's the other one? Capital gains deduction, right? Up to roughly, what is it, Jamie, 970,000 this year because it's indexed to inflation. And so those are 2 examples where capital gains are ultimately taxed. So now the other thing that there's a whole bunch of really good recommendations that came out of this report. One of which was taxation of capital gains. Another was that there should be family taxation. Do we have family taxation in Canada? No, we do not. However, we have forms of family taxation. In what sense?
Income splitting?
Well, income splitting is an anti-avoidance rule, yeah. I'm more looking at the combination of family income for eligibility for certain credits, right? Social programs. I find that when you stand back and think about that, okay, on the one hand, we combine our income for eligibility for credits, like GST credits and the ridiculous climate crap credits that I make a very good living. I'm sure most of you make a very good living. How many of you get these ridiculous checks? I mean, I just laugh every time I get them because I think, I feel guilty for putting this in my account. This is ridiculous. But it's an aggregation of family income that calculates how much it is. So that is a form of family taxation. Are there countries around the world that have family taxation?
The U.S.
The U.S. has a limited form, yeah? If you, like married filing jointly, for example, or married filing single. And yes, it does. There are other countries. Jamie, do you know any off the top of your head? I can't think. U.S. for sure, yeah. But this report advocated, and the section on this is quite nice. It's quite well developed in logic. And the proposition that Carter said was, the basic economic unit of a country is what? The family. Despite all of our ridiculous challenges that we've had, is that still true today? Yes. Will it go away? Probably not. And so with that proposition, they're saying if that's the basic economic unit of a country, is the family, then that is what should be taxed. And I wholeheartedly agree. And instead, we have a basket of anti-avoidance rules, like the tax on split income rules, the so-called TOSI regime, which is ridiculously complex. Have you figured it out yet, Jamie?
Nope.
No, I haven't figured it out either. Even though our firm has a nice flow chart, we haven't figured it out. It is ridiculous. Wouldn't all that go away if you had just simply family taxation? Now, skill testing question, I'll give away another book. And Jamie, you're eligible for this, because I'm going to guess you haven't thought about this in a while. Is there the ability to combine income with families and have it taxed in Canada?
Flat tax?
Nope.
Trust?
Nope. Come on.
Fraud.
Sorry? Fraud. Okay, you get a book. No. How about communes? The most common you can think of is like the Hutterite colonies and what have you. Section 143 of the Income Tax Act. They have the ability, if they elect, which all of them do, to combine all of their communal income and divide it amongst the communal members. Now, there's a lot of history behind that provision, but when the anti-income splitting rules were introduced in the Act with the 2017 private corporation tax battle, those rules were accepted. And I was pretty upset by that because I thought, you're going to allow commune taxation to continue, but you're going to go after the small business owner. Really? So how many of you knew that? Any of you? Jamie, did you know about that? No? Oh, I caught Jamie on one thing. That's a first. Sorry? No, I'm not giving him a book. It's too expensive. No, just kidding. So it's things. The reason I raise this is there's lots of this in the Income Tax Act. Political stuff, vote buying stuff, just overall complex stuff. The stuff that I hated during the Harper years was the proliferation of personal tax credits. You know, you get arts and fitness credits. How much is that worth, by the way? They're no longer around. You remember that? It was to a maximum of $500, I believe, for art and fitness. But at the lower tax rate, you multiply it at 15%, it's a whopping $75. Plus, if the provinces kick in, which they generally do, it's a little bit more. It's ridiculous stuff that complicates the Income Tax Act. And so, all to say that it's time to clean it up. I would suggest to you that if you're interested in this topic, which I hope by the end of this presentation you're at least a little intrigued, you'll go and take a look at the 6-volume set of the Commission report that was released in 1966 and have a couple glasses of wine and just skim it and read it. I can tell you I regularly do because I want to see, if I'm thinking about an issue, I want to think, did the Commission look at this? And 9 times out of 10 they did. Because like I tell my kids and some of the youngsters in our practice, there's not many new ideas out there. You might think there is, but there's not. There's new technology and new toys, like the iPhone, for example, that wasn't around 20 years ago. The internet wasn't around 30 years ago. Email wasn't around 30 years ago. But ideas, they've been around forever. And so go and take a look. In my opinion, the Commission report should be mandatory reading for anyone practicing in Canadian tax, including you. Before you pick up the phone and call your buddies in tax, maybe just think about what's the policy behind. What was Canada trying to do when they introduced these rules? And take a look and see if there's some ideas. So after 1966, this is a little bit of a history lesson here. After 1966, do you think Lester Pearson and his cohorts jumped on the recommendations and implemented them all? No. If you study history, it was actually pretty controversial back then. I wasn't around in 1966. It was close, but not quite. I don't think you were either, Jamie, were you? It was close. I'm a 68er, so I turned 55 this year. Am I older than you?
Yes.
Oh, shit. Really? Damn it. But if you study this era, there's tons of controversy about the recommendations. And you can see why, right? Taxation, full taxation of capital gains. Well, you would have had lots of politicians back then that would be entrenched on zero tax, right? Because a lot of people wouldn't want to pay capital gains tax. Family tax, what are you talking about? And so lots of political entrenchments. Fast forward to 1969, that's a long time in the whole scheme of things, 3 years. Then Finance Minister Benson released a so-called white paper. This is a copy of it here. There's not a lot of copies floating around the internet. And so they took consideration of the Commission's recommendations and subsequent opposition, which ultimately led to major tax reform 3 years later in 1972. And many of the Commission's recommendations were not implemented, like family taxation, for example. And instead, they compromised on capital gains tax. Instead of being fully taxed, they implemented half tax. Now, why do you think they did that on capital gains tax, by the way? Any thoughts? Look, what do you think the opposition was for full taxation of capital gains? The most common opposition point. Anybody? Disincentivize investment. Yep, absolutely. And even to this day, that is the most common argument you hear. Whenever somebody advocates for higher capital gains inclusion rates, and there's no shortage of people that do, and bodies that do, that is the most common rebuttal, is that, well, you're going to disincentivize investment. And there's a lot of economists that agree with that. I tend to agree with that, but I guess time would tell. Have we ever had a higher than 50% inclusion rate? Yes, when? Prior to 2000, yep. Yeah, good. 1986, I think, or 87, all the way to year 2000. It stepped up from 2/3 to 3/4, stayed that way for a long time, and then 2000 it stepped down from 2/3 to 1/2, and we've been that way ever since. And did we ever have an estate tax in our system in Canada?
Yes.
Yeah, we did. Prior to 1972, we had an estate tax. What is an estate tax? An estate tax is when you die, you calculate the fair market value of your assets, and you pay a tariff. You pay a tax. Is there any big country in the world that has, or countries in the world that have an estate tax? The U.S. is the most common. France has one. A lot of the civil law countries have estate taxes. And so Canada does not. Instead, it has a deemed disposition tax, which came out of tax reform in 1972, and it's been that way ever since. Ever since 1972, though, the architecture of our act has remained the same. It really hasn't changed much, the architecture at least anyhow. But what has changed is what I call patchwork quilt. You know, there's been change upon change upon change upon change. And if you think about an old 1972 Chevrolet, I don't know the model, I'm not a car guy, but Malibu, were they around in 72? Okay, good. I was going to say Malibu, but I stopped myself. So, you know, think about just changing the tires, maybe doing some paint jobs, maybe making it a low body, that the cool kids like to do, adding some mufflers, and that's pretty much, now you've got a Chevy Malibu that looks really dumb. And that is analogous to what we have with the Income Tax Act. It is horrifically complex, and the last bullet, a lot of my peers don't like hearing this. They actually get quite offended when I say this, but I'll stand by it every day. The average accountant and lawyer is in no position, absolutely no position, to adequately interpret the Income Tax Act. If you have a buddy accountant who's a general practitioner who says they know tax, bullshit. They probably don't. And I hope they know their limitations, because most of our peers do, thankfully. It's the ones that don't that get me quite annoyed, because those are the ones that end up on my plate for fixing. And it's the fixing that causes a lot of problems. But if we had a much simpler system, we wouldn't need that. You wouldn't need geeks like Jamie and myself and a bunch of others across Canada, which the amount of tax specialists in Canada are quite small. There's not a lot of us. Although if you talk to the average Canadian, most accountants know tax. No, they don't. And that's the problem, is because the Income Tax Act is just too complicated. So have there been many or limited reviews of our income tax system since the last comprehensive review? There's been some. Like we had in 1986-87, rest in peace, Finance Minister Michael Wilson, who recently passed away, implemented what was considered to be major reform in 1987. This is just when I was starting to get into tax. And so this was a big deal. And the highlights of this reform were changing many of the personal deductions to credits. So all the personal credits that you see on your tax return now, you can thank Finance Minister Wilson for that. It used to be deductions for a lot of that stuff, but now it's credits. He introduced the proposal for the general anti-avoidance rule. which ultimately got implemented into law in 1988, I believe. But he introduced the general anti-avoidance rule concept in consultations. And they also reduced tax rates. Interesting time back then because there was a lot of economies in Canada that were struggling, in particular Alberta, coming out of the National Energy Program, and the economies were hurting really bad. And so, interesting time to see lowering of tax rates. So I'd encourage you to take a look at that as well. My good friend Jack Mintz, who I've been fortunate to get to know over the years, who is a world-renowned economist and a good Canadian boy, was appointed to study business taxation in Canada, and ultimately released a report in 1997, late 1997, which led to some changes in business taxation the next year in 98 and 99. And ladies and gentlemen, that's probably about it in terms of tax reform. So before well, actually I'll get to this, so maybe I'll stop. I'll leave that thought for a second here. So is Canada ready for comprehensive tax review and reform? Many observers don't think Canada's ready. And some Department of Finance bureaucrats, after the disastrous rollout, stated that Canadians aren't ready. So let me give you a little color there. So how many of you remember that 2017 private corporation tax battle? Of course, good. None? Actually, I'm more interested in how many of you don't remember. You don't remember. Okay. If I was a little rude, which I'm a very polite guy, I would say, what? You don't remember? They're really young, so I can give them a break? Okay. Because that's not that long ago. And the headlines were screaming. So let me paint you a little picture. So back then, I was the co-chair of the Joint Committee on Taxation for the Canadian Bar Association and CPA Canada. And so that's kind of the body that studies technical stuff and publishes in response to technical proposals. So here I am on a holiday with my kids and my wife. Very first time I went to Niagara-on-the-Lake with my wife and kids. Beautiful spot in the world. And I'm walking down the street on July the 18th, 2017. All of a sudden my phone blows up in the middle of walking in tourist country. And I look at this headline and I have to sit down. And so I tell my wife and kids, hey guys, I'm going to be a bit. I got to take a look at this stuff. I took a look at it. I couldn't believe it. And I was shocked with some of the proposals that were there. That ruined my entire vacation. I studied it on the plane back. And a week later, the Joint Committee requested a meeting with the Department of Finance. And so on August the 6th or something like that, whatever the date was, of 2017, a bunch of us went to Ottawa to meet with the Department of Finance to discuss these proposals. I walk in as the chair, along with my co-chair on the legal side, and there's a bureaucrat who will remain nameless. He pulled me aside. He goes, hey, Kim, nice to see you. God, these proposals are going to be good for you, right? I said, what? What do you mean? He goes, what's going to keep you and your colleagues really, really busy? And I said, really? Come on, Mr. X. You really don't believe what you're saying, do you? But I can tell you he did. And that, to me, is a foundational problem. Because when you have bureaucrats who are so invested in the system and can't see the bigger overall picture for the benefit of Canada, which is a simpler, kindler tax system which invites more Canadians to participate, that's a problem. It's not about investing in Kim Moody or his colleagues or the tax geeks. I got enough work to keep me busy. But that's a true story. And that's where this came out of. That true story later, when all of a sudden people started resurrecting the old tax reform trumpet. Because if you're going to do this kind of stuff in 2017, then let's take it all on. But after this was all done in 2019, those same bureaucrats I was having coffee with, and they said, there's a number of them that said, especially some of the leaders that said, I don't think Canada's ready for tax reform. Look what happened in 2017. And so there is a big section of the bureaucrats that believe that. There's a big section of the academics that believe this. And in 2018, the Canadian Tax Foundation published a very good set of papers on Canadian tax reform, and with opposing viewpoints. And this one, Shirley Tillotson, I'd never heard of her before, but she's a history professor out of Atlantic Canada, apparently knows nothing about tax, but knows lots about Canada, and so wrote a very thoughtful paper, but basically her conclusion was, because the political environment is not right, we shouldn't do comprehensive tax reform. And I can tell you, Shirley's view is very, very pervasive throughout the bureaucrats and throughout many political parties, which is, in my view, very disappointing. But you have the alternate views, and in the same set of papers, Fred O'Riordan, very respected practitioner, wrote why Canada needs comprehensive tax review, and he sets out his proposition that periodic broad-based reviews are necessary as an alternative to piecemeal policy done through the often politicized annual budget process. I've been fortunate, like Jamie, to be in the lockup in Ottawa for the budgets for a lot of years. I think I've been to roughly 20 lockups. And it's like a kid in a candy store. At least it is for me, Jamie. I don't know about you. Do you like it as much as I do? Good time. You're there without your cell phone for 8 hours with the budget documents, and you're studying them. I mean, that is heaven on earth. No kids, no wife, no... My wife is here, and I wanted her to be here because in all the 30 years of practice and speaking, she's never seen me public speak. And but she's afraid that I'm going to call her out like I do with Jamie. And so she's probably right. So, but I think this is off. I mean, those budget. Just to finish my thought on budget lockup, when you read the budget documents, a lot of it is politics. It's not a lot of good policy, and somehow good taxation policy has gotten away from us over the years. And frankly, it's just a fact and a reality. Politics are always going to be involved in budget processes. But certainly my years of practice, it's gotten, in my view, steadily worse. And so I think Mr. O'Riordan makes a very good point, which is obvious, is that you should have periodic review. You should review the overall system without the lens of politics. Yes, politics is important because ultimately that's what will get it done. But you should review it from a good taxation and look at these principles. 4 principles that he talks about for a good tax system, which if you've studied Adam Smith, by the way, Adam Smith pretty much parrots these tenets of a good tax system, which is fairness, equity, and legitimacy. That's principle 1. Neutrality and economic efficiency. That's principle 2. Simplicity, administrative feasibility, and certainty. Now think about that. That's principle 3. That's the one I get really passionate about, is simplicity, administrative feasibility, and certainty. My colleague and I, Kenneth, I'll just give you an example of what we mean by that. My colleague Kenneth Kung, one of the smartest tax practitioners in Canada, did a little podcast about CERB audits. We did a podcast last week, or 2 weeks ago on that. So people were applying for CERB and wage subsidies during COVID like crazy. Because literally, and I'm not exaggerating, you could do click, 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 and get a check. For CERB, for sure. And wage subsidy, it wasn't far off. Click, 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 wage subsidy. And thankfully, Canada Revenue Agency is finally starting to audit because there hasn't been a lot of audits. And so I think the simplicity part of getting those rebates, yeah, that's good. The administrative feasibility, yeah, they probably had that down. But the certainty, yeah, give me a break. That legislation for wage subsidy was some of the most difficult and poorly written legislation and vague legislation I've ever seen. And so, unfortunately, it'll be the taxpayers who get audited and who thought that they were entitled to these rebates that are going to get sideswiped. And is that certainty? No, it's not. And so I think this is something that's extremely important in our tax system that needs to happen. And of course, especially in today's world, international competitiveness. We can't be out of step. Are we out of step in Canada compared to certain countries? Yes. Yeah, give me an example of where we're perhaps out of step. The obvious one. Jamie, pick one. Why? Yeah, they already said that. I'm saying, give me an example about the U.S. where we're out of step.
I think
Our rates.
way too high.
Our rates. So I deal with a lot of professional athletes, as Corey, fumbled through my bio, and and read it wrong, and just kidding. But
Well, thanks for attending.
all right, I'm not being asked again next year. But so the highest tax rate in Ontario, which is where Jamie's from, is what? Personally.
53.53.
Yeah, so call it 54, right? 54%. Now think about that just for a second. 54%. Is anybody offended by that?
Yes.
I could tell you I am. You're left with 46 cents on your dollar. That's nuts, in my view. Now, the contrary to that, and there's no shortage of people that just Google and say, oh, but Canada had a 90% tax rate back in the 1960s. So actually 54 is pretty cheap. That's the example of shallow research, okay, and not deep thinking. Yes, it's true, we did have a 90% tax rate, but times were a lot simpler back then, and that was reserved for some extreme income. Now, do I think it was right to have 90%? No, I don't. But how many people actually got sideswiped by that? Not a lot. And so put that shallow argument aside and look at the U.S. What's the federal tax rate in the U.S., Jamie?
37.
37. What's the highest, and you got to add state tax on that. What's the craziest? Give me 2 examples of crazy states for personal tax rates. California is one. Washington, yeah, okay. Florida's good. No, they're not crazy. Massachusetts is nuts, which I talked about that. Sorry? New York is crazy. I was kind of looking for New York. So, because they're nuts. Now, just as a quick aside, does the United States also have I mentioned federal and state, but are there municipalities as well that charge income tax? New York City does. Philadelphia does, I think, off the top of my head. LA does not, to my recollection. But let's focus on California. What's the top tax rate in California? I think it's almost 13 now. Is it 13.3, something like that? So you add that up, 37 plus 13.3. Now you're at 50% roughly. So let's say you're a professional athlete playing for one of the California teams, and you're a full-time resident. That's pretty expensive. Now, let's say you're a resident of Canada playing for a California team. Now what? And this is a real nuanced one that most of you probably won't know. But California does not respect the treaty, the treaty between Canada and the U.S. So that 13% you're paying does not get creditable against any Canadian tax. Try that again, the other way around. Your Canadian tax is not creditable against your California tax, is what I meant to say. And so, what is that? 67%. Well, it's not quite additive like that, but it does get to a point where the amount of tax you're paying is well over 50%, which gets into crazy Ontario and Atlantic Canada and Quebec and BC, which BC is crazy as well.
Is that why the pros moved to the States?
Is it, sorry?
Is that why the pros moved to the States?
There's a lot of pros, and there's a good reason why you're seeing a lot of shifts in businesses from California to Texas to Florida. It's obvious. You know, Elon Musk, love him or hate him, you know, I don't intend for this to be political, but there's a very good reason why he's moved his operations to Texas. It's because the tax regime in California is nuts. And so international competitiveness can actually work in Canada's favor in some cases, like California. To set up shop here in Alberta is much better from a tax perspective than setting up shop in California. But if you're a pro athlete playing in California, yeah, not a good thing, right? So, but my point being is you got to think about international competitiveness. Mr. O'Riordan goes on to talk about the last 2 principles, and he uses a number of available indicators of how well our existing tax system measures up against, you know, some of them. And the short answer is it doesn't measure up that well. And for a lot of you, you know, if you've thought about this, it's pretty obvious that Canada is not very competitive. Now, let me finish off my thought on personal tax rates before I move on. Why is Canada not that competitive? Because apparently you're rich in Canada if you earn roughly more than $200,000 of income. Now, yes, it's indexed to inflation, so you'll hit the highest tax rate of income, personally at least anyhow, roughly about 230. Am I close? 235? Okay. Whereas in the United States, roughly, when do you hit that highest tax bracket? Roughly. No, it's a little more than 400. It's about roughly 5 to 6 in that range, 500 to 600,000. When you combine foreign currency as well, that's a big, big difference, right? That's a big difference. Now, yes, the United States is much, much larger than Canada. I get that. And its economy is much larger. But my point being is that we're not competitive on personal tax rates. There's a reason why we don't attract a lot of C-suite people. There's a reason why the Calgary Flames and the Toronto Maple Leafs are not getting a lot of good professional athletes. John Tavares being one of the few exceptions. Austin Matthews, that'll be an interesting one to see what happens there. My Flames, unfortunately, I think are in for a rough time on free agents. And if any of you are Canucks fans, which are a bunch of losers, they're in for a real rough time. What? Did I say something offensive? So the conclusion that Mr. O'Riordan has is there's sufficient scope for improvement. I do agree with him. Let's move on. CPA Canada. Jamie, did you read this report? Yeah, it's a very well done report. I think it was under Bruce Ball's penmanship before he retired. Very well thought out report. Have a look at this as well. I think it was released in 2020-ish, something like that. It's aged quite nicely. And basically, here's some of the quotes that come out of it. And, a tax system is fundamental to creating a competitive environment and a fair society. If you understand that first sentence, that's good enough to understand that a tax system is critically important. And a review of that system is critical. But they go on to say it needs a 21st century tax system. Simple? There's that word again, simple, right? Every time I talk to my in-laws or even my siblings, they're like some of the bureaucrats I already mentioned. Well, Kim, why do you want it simple? You'll be out of a job. Come on. I care about Canada. I don't care about me. And I think I'm a bright enough guy that I'll figure something else out. If somehow my role is gone to the curb, which it won't, by the way, because tax, like Albert Einstein is purportedly attributed to saying, and I can't confirm it, but there is nothing more complex than the income tax. Do you agree with that? There's nothing more complex than the income tax? You notice how he said complex, but not important. I think tax is still important, but I think there's other things that are more important, like health and medicine that are more important. But when you have something so complex, in my view, there should be a big attempt for it to be simpler. It should be predictable, fair, efficient, and transparent with an internationally competitive tax rate. So that comes out of O'Riordan that we just said, where everyone pays their share so that all Canadians prosper. Yet, the system remains mired in the past. It has not taken a holistic review since the 1960s, and we've had dramatic changes since then. How many would the authors have predicted in 1966, when they issued the reports of the Carter Commission, that we'd have an internet society, an Amazon-type system? No, they certainly didn't predict that. And of course, we're suffering from competitive setbacks as a result, and rates are an obvious example of that. And so CPA Canada believes it's time for the federal government to consider all aspects of the tax system. Yes, I agree. I don't agree with the naysayers and people who say Canadians are not ready for comprehensive review, and I hope I've made that quite obvious. So long overdue and necessary, truly needs to modernize its income tax statute. A key objective should be to try to simplify, like I said, fingers crossed. Now, Jamie and I attended a conference in, what was it, May? That we were speakers at on, was it June? In Toronto? Okay. Time flies. And this was the topic, this was one of the topics, was comprehensive review. and there's a bunch of other topics, but this was the overlying was is Canada ready for comprehensive tax review? And it was kind of a private audience, and so I can't tell you too much of what was said. I will tell you that off-the-record discussions, though, with some very, very smart academics and practitioners, they pulled me aside and they said, Kim, you're an idealist. You want to tear it all down and start again. And I said, yeah, you're right, I do. I am an idealist. He says, well, that's not realistic. And this particular practitioner I have a lot of time and respect for, and so I poked him a little bit and said, well, tell me more. Why do you think it's not realistic? And so his short proposition was that the environment, like Shirley Tillotson said, that history professor, is that the political environment is just not ready for it. And this fellow's probably right. So yes, I'm an idealist. Yes, the ideals are probably not practical or realistic when it comes to this topic, but I do think that the best way to deal with getting something better is to blow up the Chevy Malibu, or at least park it, and start again. Something like what Elon Musk did when he, and early other people did when they created the electric car, which is an amazing piece of technology. Is it going to save the world? I don't think it's going to save the world, but I think the technology is amazing. I always say to my kids, I think I'm going to buy a Tesla, and I'm going to plop a great big I love Canadian oil and gas on the back bumper. Sticker. My kids say, yeah, don't do that, Dad. But do I think that's an example of what we need with our tax system? Yes. But I do recognize that given the political environment, it's probably not practical. But I do say, and I'll repeat myself for probably the 5th time down below here on this last bullet, a key objective, if a comprehensive review is not possible and we're going to have limited form review, I think a key objective is to make the Act and its administration simpler for the average Canadian. The average Canadian has no idea. How many of you do your own personal tax returns? You're crazy. I know you do because you've written on it, Jamie. and your battles with CRA, which good on you, by the way. I like that. But how many of you do it by hand? None. How many of you know what the hell you're doing? I challenge you. I bet you don't. I'm kidding. Of course you do. But software does a pretty damn good job, doesn't it? Of at least finishing it. But I challenge you, do you actually understand what each provision is doing? And I can tell you, when I did my first personal tax return in 1986, I think it was, as a youngster, I actually took the time because I wanted to understand. Now, I didn't dive into the Income Tax Act back then, but I did try to understand it. And unfortunately, we're too reliant on software, in my view, and we need to get back to making it simpler. All right, I'm almost done here. So, let's talk about insurance investment. What would comprehensive tax review mean for insurance and investment advisors? Like, for example, what could happen as a result? If you were to tear it down or blow up the Chevy and start again, what would it mean for your industry? Well, does it mean the taxation of life insurance needs some reconsideration? Yeah, I think it does. Should the capital dividend account go away? Is it worth keeping? I personally think the capital dividend account is brilliant, to make it neutral. If you have a capital gain, you want to maintain half taxability, then the legal entity that you're recognizing that capital gain in, it should be neutral, right? So the capital dividend account does that for corporations. But does it make sense for insurance? Should life insurance be tax-free? The death benefits be tax-free? That's debatable as hell. Yes, I know you're vested. I get that. But in the United States, sorry? Hey, lottery winnings in the States are taxable. I've got a story on that if I have enough time here shortly. But life insurance, I think there's good arguments that it should be taxable. Is it taxable in the United States? It adds to your U.S. estate tax, right? Computation of fair market value, unless you plan around it, which it's easy to plan around. So So, thinking radically, should it be taxable? Like I say here, let's not get crazy here. But I think stuff like that is worth debate. Everything should be on the table if you're in the idealist camp like I am. Should capital gains be fully taxable? I mean, there's some strong arguments like Carter put out that they should be. I personally think that 50% is a nice compromise. What do they do in the States, by the way? Anybody know? No, that's for state tax purposes. But what do they do in the United States for paying tax on capital gains? Right. Yeah, I heard it back there, and Jamie said it. Short-term, long-term, which overly simplified is a little more complex than this. But if you hold a property more than, I think it's a year, then that gets into long-term, and you're at a 20% federal tax rate. And so it's a bastardized version of what Canada's done. Canada's just across the board, 50% inclusion rate. And other countries have different versions as well. And if changes like this happen, how would that affect clients' investment policies and portfolios and their estate plans? Well, it would dramatically change it, right? In a heartbeat. And if family taxation was brought in, how would this affect the insurance and investment community? In my view, it would change it dramatically. And I think family taxation is something that Canada needs to reconsider again. And although I can tell you under the current bureaucrat regime, there is no interest in this. And if anybody wants to know why, I'm happy to talk offline. So our current government, this is the most political statement I'll make here, okay? I'm not talking politics. I'm not advocating anything. I'm delivering you some facts here, okay? And it's a fact that our current government, and frankly, even prior to our current government, there is no interest. The Stephen Harper years, there is no interest in tax review and comprehensive reform. Our current government, no interest in review. I am a little bit encouraged that when Pierre Poilievre was running for the leadership of the party, of the Conservative Party, that he committed to instituting an expert panel and tax force to review our tax system. Not sure if that will result in comprehensive, if he does get elected, not sure if that ultimately will be comprehensive. I tend to think probably not. But at least it's a start, and we'll see where it goes. But you need the political will at least to have it. So my concluding comments here, if you're passionate about this topic, like I am, which after this I hope you are, and I hope you see the importance of this topic, then speak up. Like a lot of us spoke up in 2017 during the private corporation tax battle, and we made a difference. Your voice means a difference. But in the meantime, as they say, keep calm and rock on. I will tell you a short story on lottery winnings. Who's the fellow that said lottery winnings are not taxable? I think it was you, right? What's your name, sir? Don. So Don, and I'll conclude my session on this, because I think it's a little bit comical but true. So, holy Jesus, by the way, this countdown clock is amazing. 1 minute 29, and then it's got to a tenth of a decimal that it's swirling by here. That's interesting. I've never seen that. So lottery winnings in the United States are taxable. If you're a U.S. citizen who wins the lotto and you're resident in Canada, are you going to pay U.S. tax on those lottery winnings? So here's a true story. So we have a fellow who came into our office and he won the Lotto 649. I think it was $50 million, if I recall correctly. And this was about 8-9 years ago. And so first question we always ask people is, where were you born? Now, why do we ask where were you born? Because if you're born in the United States, you're just so damn lucky that you're a U.S. citizen for life, right? And so, but if you move to Canada, so what happened in this case is, yes, the person who won was a U.S. citizen. He was born in the States, and he was married to a true blue Canadian, but he was born in the States and moved to Canada when he was, I think, 6 months old or something like that. So no allegiance to the U.S. And so my U.S. colleague said, so you're a U.S. citizen. Who bought the ticket? And he says, well, I did. I bought it at the gas grocery store. And so we explain the issue, and then we say, let's ask you the question again. Who bought the ticket? Did the wife buy the ticket, or did you? Anyhow, I'll leave it at that. So anyhow, thanks very much.
You know, thanks, Kim. It's so nice to see an accountant with a personality. Nice. Nice.
So Jamie doesn't have one?
We'll get to him later. You know, Kim, thanks. It is so good that when you know your subject so well, you can take something complex and make it very simple. So again, thank you. And Kim's is not speaking in any other session. This is his one time with us for this entire school. So, what?
Except for the other time.
Oh, I mean anymore. So.
Thank God Rick's coming back.
Kim mentioned that his wife has never seen him speak in public. What a lucky lady. Kim, do you want to keep going?
She was a lucky lady to be with me.
Whatever. So Kim, as a token of our appreciation, here's something that we know that we can write off.